All right, welcome back to another episode of the Black Bullion Show. Another 1.542 million Americans file for unemployment benefits. This information comes on the heels of Jerome Powell painting a grim picture for the economy. But on that bright note, if you are new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses. Let's continue this positivity. so, okay. So at this point, those numbers, unfortunately, these unemployment claims aren't really too surprising. But, check this out. We actually made some history recently with more than 47 million applications for unemployment benefits have been submitted since the issue began in March. Government records show a number never before seen in history, including during the Great Depression. So we just made some crazy history. Check this out. Fed leaves rates unchanged and projects years of high unemployment. So whatever it is that we are currently living through right now, we will likely continue living in this quote unquote new normal. And here are some, on the heels of that, here are some pretty cheery words from Jerome Powell. And I quote, "My assumption is that there will be a significant chunk, well into the millions," Mr. Powell said, referring to workers who don't get to go back to their old job. And in fact, there may not be a job in that industry for them for some time. The Fed will do whatever we can and for as long as it takes to support the recovery, he said, including buying large quantities of bonds and leaving interest rates near zero for a long time. His central bank colleagues projected no increase to borrowing costs through at least 2022. And Mr. Powell said the Fed was not even thinking about raising rates. I like that. Not thinking about raising rates. So let's get into some of the details from the FOMC's meeting that they just had. So here's their statement that you can actually find on the Fed's website. And I'm just going to read a bit on here on the economic data and some of the programs that they will be continuing. And I quote, "The ongoing public health crisis will weigh heavily on economic activity." And I say this literally, they released this on June 10th. So even they are saying that we are not out of the woods yet when it comes to this crisis. It will weigh heavily on economic activity, employment, and inflation in the near term, and poses considerable risks to the economic outlook over the medium term. In light of these developments, the committee decided to maintain the target range for the federal funds rate at 0 to 0.25%. The committee expects to maintain this target range until it is confident that the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. The committee will continue to monitor the implications of incoming information for the economic outlook, including information related to public health, as well as global developments and muted inflation pressures, and will use its tools and act as appropriate to support the economy. In determining the timing and size of future adjustments to the stance of monetary policy, the committee will assess realized and expected economic conditions relative to its maximum employment objective and its symmetric 2% inflation objective. This assessment will take into account a wide range of information, including measures of labor market conditions, indicators of inflation pressures and inflation expectations, and readings on financial and international developments. To support the flow of credit to households and businesses over coming months, the Federal Reserve will increase its holdings of Treasury securities and agency residential and commercial mortgage-backed securities, at least at the current pace, to sustain smooth market functioning. Now, pause for the cause. We've already talked about the problem with mortgage-backed securities, them ballooning up to such a huge extent, and what issues could be down the path or down the pipeline when it comes to some of these mortgage-backed securities. But I digress. Let's continue. Thereby fostering effective transmission of monetary policy to broader financial conditions. In addition, the open market desk will continue to offer large-scale overnight and term repurchase agreement operations. So that repo money is going to continue. The committee will closely monitor developments and is prepared to adjust its plans as appropriate. All right. So generally, things ain't looking good, man. Things ain't looking good at all. So I'm curious to see how equities will continue to behave with this information. Obviously they've been tanking today. I'm recording this on Thursday. So let's see how the bond market is doing right now on this Thursday. So this is the 10-year. Oh, I don't like seeing these 666s here. That's not good. But the U.S. 10-year Treasury, right now, its yield is 0.666. That is actually very creepy. I actually don't like seeing that. Basically, what that tells you is that a lot of people on the heels of this economic news are piling into safe havens, which is bringing down the bond yield to this very insane number that I'm looking at right now. And I can only imagine this being a boon for the gold price, as it will be competing over investors who are looking for safe havens. It will be competing with the 10-year. But what do you guys think? Let me know in the comment section below with all this information. Let me know what you think about this ominous 666 here that I see on my screen. And thanks again for listening. Thanks again for watching. Please give the video a like. Please subscribe. It's Black Bullion.